Hello, everyone. Happy New Year, and welcome back to Prinsights Global Spotlight. Today, I am so pleased to welcome back Rich Checkan, who's the president of Asset Strategies International. Rich has spent decades working at the intersection of monetary history, precious metals, and wealth preservation, and been a consistent voice for investors navigating inflationary cycles, currency debasement, and market volatility. We are welcoming him back to discuss his recent year-end perspective, where he laid out why gold, silver, and the broader precious metals complex were the story of 2025 and have significant upside ahead in 2026. Rich, welcome back.
It's great to be back. Happy New Year, Naomi, and Happy New Year to everyone watching.
Thanks so much. Now let's get into it. You've written about this and you live it. Precious metals were clearly the standout performers of 2025, with gold, silver, and platinum all reaching new highs. And you've said that you expect more of the same in 2026. So, what are the core forces that make you confident that this bull run has more room?
Well, right off the bat, that's a great question because everybody's asking, have I waited too long? Have I missed the boat? Is it gone without me? I don't think anything could be further from the truth. I know some people are looking at technicals and thinking, maybe this is going to run out of steam at some point. I don't think that's the end of the bull market. If it's very likely that we may see a pullback and a pause. We've been running pretty hot here, but I just expect that to be a higher low followed by higher highs afterward. The reason I say that is, let me ask you a question. Did I miss a news clip? Has everybody in Congress decided now to balance a budget? Did I miss something? Of course, the answer is no. There's no fiscal responsibility. There's no will to be fiscally responsible in Congress. Therefore, you and I both know how this plays out. We are going to overspend. That is going to require us, in order to pay our bills without defaulting, we are going to have to expand the money supply. And when you have more dollars chasing a finite number of goods and services, you are going to have higher prices, both at the producer and the consumer level. So we know how this plays out. This is not new. This has been playing out and will continue unless there's a will to change this. I don't see one. I think we're continuing to overspend. Last I looked, I think we're already on pace for another $2 trillion, this fiscal year or more. That plays well for real assets. Anything of value is going to take more worth less dollars to buy in the future.
Yeah, that makes a lot of sense. And even inflation, and I've had this question, so I pose it to you from a lot of people. Well, if that's the case, does that also mean inflation's running higher? And the reality is inflation at like a 2.7 handle for last year was happening at the same time that gold and silver and platinum are all screaming massively to new highs relative to the S&P. So does it really matter if you're looking at investing in these commodities?
So the bottom line is this has been pent up energy in the commodities for some time, and it's finally taking hold. You were at these conferences 3 years ago when I said we're near all-time highs at 1,800 in gold. By now, it's dirt cheap, and nobody wanted to hear it, right? Next year, $2,400 an ounce. By now, it's dirt cheap. Silver's cheaper. Nobody wanted to hear it. They're going to wait for that dip, right? This year, you were there. $3,000 an ounce, all-time highs. By now, it's dirt cheap. And I said, don't make me come back next year and tell you it's $4,000. And it already is, and it may be $5,000 by the time we get back to that conference next year. So the bottom line is this has been pent up. This is building up. The first 3.5, 4 years, I think, in gold has all been driven by the central banks. The retail investors have only now, this past summer and this fall, gotten into this trade. And now it starts to get fun. So, initial estimates where we can go a certain distance, I think we can actually go further in gold because the central banks gave us a head start. And gold's performance last year, I got mixed up at the end of the year. It's either 56 or 75%. I don't know it off the top of my head, but it's a lot. And it's probably 2 to 3 times or more what the equities indexes in the U.S. did. Silver is honestly even more interesting, in my opinion, because it was set up with a breakout of a 45-year cup and handle to go to 90 to 100 all on its own with that pent-up demand. And then what happened at the end of the year in China, right? The world's producer of 60 to 70% of the world's silver said, you know what, we're going to cut back on how much we're sending out to the world because we need more internally. This is already having a massive impact. I think this is part of the reason we're seeing silver go on this kind of hyperbolic run the end of last year and so far this year. We're taking a little bit of a pause here and there, but for the most part, silver is running, and I think 90 to 100 is low now.
Mhm. It's interesting. You've said consistently, not only have you forecast where gold would be and urged investors to get in along the way, and we continue to massively push through these new highs again and again. You've also said that if gold is cheap, silver is cheaper. That's one of my favorite quotes from you, Rich. And you mentioned China, and it promised at the end of last year it was going to put in more export controls as of January 1st, 2026. And it has. So yeah, there was a reaction, there was a bit of a pullback, but now they start to take effect. So what does that mean for silver prices?
Well, I can only see them going higher. You got to think right now there's about 356 contracts to each ounce of silver physically, futures versus physical silver on the ground. That's already a bad disconnect. Add to that, last year, I want to say the shortfall was about 250 million ounces of silver in production versus demand. That follows, well, that's the fifth in 5 years of deficit production, the first two of which cleared out 11 years previous of surplus production. So for 3 years, we've been dipping into the well deeper and deeper. And, you've got China, but you've got the whole world grappling for silver so they can generate EVs, they can make solar cells, they can go ahead and build out their data centers for AI development. I mean, all of this is demanding more and more silver at a time when the silver supply is going down. And then, oh, by the way, 60 to 70% supplier to the world is going to back off on how much it sends out its borders. It's going to have a massive impact. It already is.
Yeah, no, absolutely. And one of the other things that you mentioned in your piece about the recap for 2025 and how that feeds into the upside for 2026 in these commodities, which I thought was really interesting, was that seeing in black and white, oil prices declined. Bitcoin underperformed these commodities. And, you mentioned the SP 500, it was only up 16% relative to 65% in gold, 140%, 150% in silver, 130% in platinum. What is that telling us about where capital's actually moving and where it's going to be moving?
Yeah, well, you know this well because you follow the mining stocks as well. You know where the capital's going. Clearly, investors are seeing the opportunity in real assets. So that's where it's going. You look at those other three assets, and let's face it, we've ramped up production of oil worldwide. I believe even the Saudis have to compete with what we're generating. So that's kind of kept a lid on the oil price. Bitcoin had a run. Let's make no mistake about it. Got to 126, 128 or something like that, and then pulled back to 80. I think it's about 90 something as we speak. But that remains in my mind. I own it. I have no problem with the roller coaster ride because I treat it like I think it is, a speculation. And it continues to act like a speculation. Not a good year overall for Bitcoin, but, it's still better than where I bought it by a long shot. And then you look at the equities markets, and I think a lot of people have claimed that they've been overvalued, and I don't think it's a false claim that they've been overvalued for some time. You really have to look for the value in that marketplace, not the full equities index is performing. It's a handful that are really doing well and propping up the rest, I believe. So I'm not surprised by the underperformance elsewhere.
Yeah, it's interesting. And just looking forward, as an investor, people out there listening to this or watching this interview with you today and with your font of knowledge. I mean, you get the numbers, Rich. You have from the standpoint of being the president of Asset Strategies International, you see the flows as they change. And I think you've made this distinction between gold is that wealth insurance, kind of preservation of generational wealth, and then silver, platinum, palladium as more actively managed type of more profit-oriented metals with other reasons for their behavior. So how should investors, either in the space or new to the space right now, starting 2026, making those decisions for their portfolios, think about balancing those roles as volatility increases, as policy uncertainty pervades, and we're living in the world we are in today?
It's a great question. It's one of the things I covered because I think it's important to cover right now. People are got to resist the urge, if you will, to just jump on that bandwagon and say, it's going to go up forever. It won't go up forever. I'll tell you that right now. But I treat it a certain way. We've talked a little bit about this before in the past, but it's steadied me well for now 30 years in this business. I look at gold specifically as my wealth insurance, right? So that is the first thing I buy. I don't concern myself with profits. First, I want to protect my house before I start filling it up with furniture, so to speak. So with gold, I buy whatever my allocation is. I'm not an asset manager. You do what you feel best, but I do about 10% of net worth in gold. All right. And that's my protection. I buy it, I hold it, I never get rid of it unless I have a financial crisis. Store purchasing power with high liquidity for a potential financial crisis you hope to never have. If I never have one, I never sell it. If I have one, I sell it immediately, I meet the need, and then as soon thereafter, I try to build up my insurance again. Silver, platinum, and palladium are more governed by the industrial supply demand fundamentals, and therefore they give you great mood swings from low to high, and therefore high profit potential in a bull market like we're in right now. We're seeing that play out right before our eyes. So I manage that differently. I allocate a smaller amount of my portfolio, maybe 10, 15% of investable funds, not net worth, to those assets. And then if they double, I don't blink. I sell half. Naomi, I believe silver is going much higher than we are right now. I sold some yesterday. Why? If you take profits along the way, double, sell half, take profits. And then when it dips, because it inevitably will, these are volatile markets, then you buy more to build up that position again to that 10 or 15%. You're buying well all along the way. You're taking profits along the way. I could care less where the top is. As long as I can recognize the difference between a dip in a bull market and the change over to a bear market. And I have certain criteria I look at for that. Happy to share it. I don't know if we have time today. So,
Well, we'll definitely have you back to talk about that because obviously monitoring risk as well as monetizing upside and keeping that preservation of wealth are all part of being a solid investor and looking at your portfolio over time. So we'll definitely get back into all of this again.
Yeah, the big point on the indicators and why I don't know that it's necessary to go into them. By all means, they could reach out to you or to me or both of us to find out what they are. But right now, there's about 9 of them. Not a single one of them is suggesting a top. I need at least 3 or 4 to come together like gathering storm clouds to suggest it's going to rain, and they're not out there. It's a clear sky. So feel comfortable taking profits and buying on the dips with your for-profit metals.
Right. Well, thank you so much for all that, Rich. You're one of my favorite people in this space and certainly of our viewers and our subscribers here. So thank you so much for joining us today, for walking us through your thinking, your investment strategies as we open up into 2026. And for those listening or watching who want to learn more about Asset Strategies International or to explore how gold and silver and so forth can fit into their broader strategy, what's the best place and where should they find you in order to connect with you and your team?
Well, thank you for offering that. 3 quick ways. It really depends what's best for you. Toll-free number is 800-831-0007, 000710, better than James Bond. The email is info@assetstrategies.com, and our website is www.assetstrategies.com. Any way you can find your way to us, and we're happy to help. And thanks for giving me that opportunity.
Thank you so much. And thank you so much for joining us today, Rich. And I look forward to seeing you mid-year again at the Rural Symposium in Boca, along with your entire team. And for everybody watching here or listening here today, thank you so much for tuning in to this episode of Prinsights Global Spotlight.